Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news the Americans are manipulating their currency to gain a trade advantage. First, however, American home resales fell more than expected in December as the supply of houses on the market dropped to a record low, pushing up prices. Volumes were down 3.6% compared with the same month a year ago, but prices were up 5.8%. However, the whole calendar year 2017 was not so tame. Volumes rose to an 11-year high. And at the end of the year, the number of houses available for sale was 10% lower. And at the current sales pace, unsold inventory is as low as since records began in 1999. And US manufacturers are reporting a strong start to 2018 with the PMI up to a 34-month high. The service sector isn't going the same way, however. It recorded a slip in expansion to a 9-month low and an expansion below that for factories. In Europe, the same survey shows a much faster expansion is underway there. Their manufacturing index is holding at a much higher level than for the US, and their services sector is even more positive and at a 10-year high. In Japan, their manufacturing survey shows good expansion as well. US officials may have opened a second front in the trade war they are starting. Yesterday it was punitive tariffs on some imports. Today it is an effort to drive down their currency. They're taking their American first message to Davos, the centre of globalisation. It probably won't work out well. Already Germany, India and China have pushed back, and the Americans will risk uniting everyone against them. The strategy has all the look of bluster that is not well thought through. And China is using its special authoritarian powers to muzzle its media over reporting corporate debt excesses. It doesn't like talk about HNA's debt stress, for example. In Sydney, their public commuter train system is to be hit with a strike. Travel in the city will become chaotic. The US Treasury 10-year yield is unchanged at 2.65% today. The equivalent 10-year China sovereign bond is down 1 basis point to 3.96%, and the equivalent New Zealand 10-year sovereign bond is down 5 basis points to 2.95%. Oil prices are up further to be just over $65 a barrel, while the Brent benchmark is now just over $70. And gold is up strongly, up $19 to $1,357 an ounce. And the US currency is noticeably weaker today, and the Kiwi dollar is now up to 74.1 US cents and back to levels we last saw in early August. The greenback's weakness may now be official US policy. On the cross rates, there is little changed. We're at 91.9 Aussie cents and against the euro 59.8 euro cents. That puts the TWI back to 74.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.